Welcome to the November 14th, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowan Group Asset Management. We're a team of 10, and this video is proof that we care about the affluent client families that we serve from the Crescent in Dallas. And you can set your time for a Zoom meeting or brainstorming session or even a tour of the offices just by going to NetWorthRadio.com. This is the fast-paced tour of the global financial markets, and what a week it was. We had huge gains in the equity markets on Thursday, and I'm going to cover the inflation report that surrounded that, and I'm going to give you some calculations that you probably haven't seen anywhere else. The crypto markets absolutely melted down in a horrific scandal of the FTX exchange. I'm going to show you the impact overall, and I'll make some forecasts for the mighty cryptocurrency markets. So here we go. This is the S&P 500 year to date, improved to a minus 16%. And that's in contrast to how some of the medical dividends have done, and also how the energy markets have produced large gains this year. That helped to weather the storm and provide resiliency. Now, here's the September storm. We can see the low on the S&P and the bounce so far of about 13%. Most of that in one day. On Thursday, I'm doing the market report in the morning for Cumulus Radio, and the report's like at 7:33. Well, inflation report came out at 7:30. By the time the report hit, the futures had skyrocketed 500 or 600 points on the Dow, and by the end of the day, the high was 1,200 points, touching nearly 34,000 on the Dow. What happened? Well, this was that report that happened at 7:30 in the morning. This is the inflation for consumers. And that's been a big story. June was really the peak at 1.3% just for the month. That was 1970 style inflation. You can see the big months in inflation. This is a 2-year chart. You can see inflation rising in 2021 and then spiking in the fourth quarter of 2021. Here we have 2022. We have the Ukraine invasion and the impact on the markets at that time. Well, what's this, and this? Well, that's 4 months, all right? 0.4% was the report, and I saw it and I thought, okay, annualize that, it's about 4.9%, right? Just below 5% inflation, not 7, not 9. Well, it's definitely down. But if you take the last 4 months and just add them up, you get 0.9% inflation for 4 months. 12 months in the year, that means inflation is running at about 2.7% over the last 4 months. We'll see what the November inflation report holds. But that was the report that corresponded to the spike, and you saw interest rates on the 10-year Treasury down 0.5% in 2 trading sessions. That means mortgage rates probably fall back below 7 substantially. And so what happened there? I thought the Fed was going to go to 5%. Well, part of it is inflation may already be contained, and that was the premise called the Fed pivot, and you usually get a huge rally after that like we did in 2019. This is S&P earnings. Standard & Poor's 500 companies, what do they make per quarter net after tax per S&P 500 unit? Well, that is after taxes. We can see right now it's about $52. Going forward, what happens? This is actually a great projection for the next set of earnings releases in January. And that says we actually get into record territory in the third quarter of 2023, according to these projections. But is that justified by the GDP projections? What does it mean? Usually analysts are a little too optimistic. It's called a potential Goldilocks economy. Now, this is the forecast for real GDP. Last year it was 5.9%. That was hot. This year, 1.8%. And 0.4% for 2023 as we prepare our financial plans for the year ahead. 0.4% is anemic growth. You may even get a quarter or two or negative, and you'll see lots more recession headlines. However, 0.4% positive is the projection for next year. 1.4% for 2024. You say, well, that's not much growth at all. Why would it be a Goldilocks economy? Not too hot, not too cold, growth beginning to accelerate after next year. And at the same time, that's an environment where the Federal Reserve, likely done with the tightening cycle, December or January. At the same time, so you have stable cost of money on the Fed funds rate. Companies figure out how to work around that. It's actually a pretty good environment for profits. Europe is in recession, that's admitted. That's where you hear the global recession. But for the US, that is actually a prediction that says we need to be cautious, optimistic, and we need to buy stuff that pays us real cash flow in a set of great assets. We want to take advantage of this because 2023 may not be that bad. This is the disaster in cryptocurrency. Bitcoin actually hit a high of 71,000 a year ago. Rampant speculation in tech stocks, cryptocurrencies, non-fungible tokens, pictures of a monkey. People were paying lots of money for it. And that market has collapsed from a peak of $3 trillion, actually 3.1 trillion on the best day for crypto. Now it's collapsed. This week at the low was 800 billion. That is $2.3 billion gone. That is husbands having to explain to wives why he put their life savings into pictures of a monkey and CryptoPunks. Makes no sense at all because it has no utility. There are likely to only be 5 or 10 cryptocurrencies with institutional credibility out of the 21,000 that still exist. The FTX exchange failed this week, and it turned out they had put client deposits over with a related hedge fund, and now they're declaring bankruptcy. That is a Wild West market, and of course, there's no central regulation for it. So part of networthradio.com and McGowan Group's job is to come to you and say, this is not a good idea when everybody was raging for crypto. What is a good idea? Medical dividend blue chips at a low multiple, the energy infrastructure, and even clean technology infrastructure, and the path forward, global high yield bond funds trading at 80 cents on the dollar, paying over 8 or 9%. Those are the areas where we're focused in the portfolios right now. If you want to get a plan, go to networthradio.com. Be sure to subscribe so you'll get fast-breaking news when it happens right here at YouTube McGowan Group. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.